Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, November 12th, 2025. It's 10:41 a.m. Eastern Time as I'm starting the video. We'll do it in this order. This is the post I just got out to you, so not a whole lot to add. It either works out or it doesn't. We shorted gold here. That was our initial sell signal. We hit T1, we bounced, and then I re-highlighted an objective re-entry if you took profits or if you missed the breakdown there. Swung it down to T3, where then the divergences started setting up. I had them hand drawn in on the screen capture software. It's on the chart I just got out to you as well. I'm just putting it down here. I keep hand drawing that in on the screen capture software. So let me put it on my chart here. So that was the catalyst for this counter trend rally. Nothing goes down forever. Hottest trade in years. So the dip buyers are going to come in by somewhere. So again, we reverse a little shy at T4, so I called it T3. And that's it. So whether or not this is the start to new highs in gold, only time will tell. And it's very simple. And I'm going to get to this in a second on a reply to someone I made on a couple of trades yesterday. A trading plan is a trading plan, and any trade, I've often said I'm not a pure mechanical trader. I highlighted that yesterday on a couple of the trades, like Ruger and the RGR and BIZD, for example, where I had additional targets. And then upon further review of the charts, there was enough there to tell me, hey, call those trades in early at the one down from the final target. I think they were both at T3. And then boom, they both reversed. And so that's part of being flexible. I will modify my trading plan if and when something in the technicals, fundamentals, or even sometimes it is gut feel experience, I will change a trading plan. But other than that, my point is stick with the trading plan. It either works or it doesn't. So on gold, like I said, stops relative. This is where we swing it down here, take it up. This was that recent trading range we popped. And then that's the comparable level I gave you on gold futures yesterday in the post. And then that's it right here. So there is it. That was the trading range we popped. So therefore, that was breakout above this recent trading range. So your next resistance will come in around, 41, 72-ish. And that's where we're at. So it either works or it doesn't work. And again, a stop is going to be relative to your price target or targets, depending on where you think gold's going. These are all potential targets. And so, I wouldn't give it too much room because a lot like the stock market, if it pops, if it gets much up in here, I don't have a lot of resistance and it may want to run at those highs or not. This would be, to me, just kind of, again, from experience, kind of atypical range for it to go up to and fail. You could look, and again, that's why I always put stops right a little bit above the resistance level. When you get to it, it's almost a guarantee in this day and age that the nefarious forces that be, the powers that be, will pop it to run those stops. So, if I see resistance here, I'm not going to put a stop at 41.74, 5. I'm going to have it a little bit out of range. And I like to do those 60-minute closes if you're trading, whatever time frame you're trading. So I've been giving you gold and GC, gold futures, on this hourly chart. And therefore, if you wait for an hourly candlestick, it helps minimize the intra-period break, where you pop, the stops get run. And so wait for that to close. You can see we also have, I didn't draw it in before, but you have some negative divergences there as well on gold and maybe a little uptrend line. So that's it. Again, either works or it doesn't. So that's it. Let's move on to the next one. And obviously, silver and GDX, they follow their big brother, which is gold. So where gold goes, they will ultimately go, especially in this kind of market that's trading right now more to technicals. They're moving almost in lockstep. So let me go to that comment that I made yesterday. This is the video where I covered, some of these, where like BIZD, where I canceled out, said, you know what, we're going to close it out here for all the reasons stated. And in that one, it was very extended. So the RR, the risk reward to try to get to milk another, whatever it is, 5, I don't know, you can do the math on the percentage points. When we were long, shortly off the lows, it's just not worth it. It's greed. Bulls make money, bears make money, pigs get slaughtered. And so that's why that one was taken out. And then, big reversal. No, look. And I give you an alternative if you wanted to hold out for that. Sometimes you can get overbought, can just keep becoming more overbought. And so I said at minimum on that one there. This is just a screenshot from the video. Set a stop below that trend line, because if they break that trend line, that's probably going to be it. And so therefore you would have been stopped out even if you were holding out for T4, which I just didn't think was worth it. So I wanted to reply to this one, Alan, and just say this was my reply to Alan. He asked for an update on Charter and Apple long and short trades, neither are playing out at the moment. I just want to be very clear that that's I welcome and encourage these kind of feedbacks and comments. So my reply in no way, shape, or form was meant to be testy or anything like that. I meant what I said. I said there's no change in the technical posture nor my outlook. And I went on to say, I make a lot of what I call yogiisms up in trading. And, everyone knows the saying, patience is a virtue, right? So I kind of added there, in life, patience is a virtue. In trading, it's an absolute must. Both of these are relatively recently entered trades, and they're both just slightly underwater. And on both of these, I gave suggested stops and price targets. So my point is, nothing's changed there in those trades. And I was just reaffirming that here. And the bottom line is, again, if I see something, and I encourage others, if you get in a trade and you realize, hey, for the reasons I went in, I can't make that case anymore, or something's changed, yeah, you can modify your trading plan. But other than that, again, I'm just trying to pass down from things I've learned over the years for experience. Have a trading plan before you buy anything. A trading plan is what you're going to buy, why are you going to buy it, where your entry price will be, the why you're going to buy it. Is it a breakout above a bullish chart pattern or resistance level? That's your entry. And then, so then you have plan A, which is what you hope for, profitability, where your price target or targets, if you have multiple targets. And then, hey, what if it goes south? What if you go wrong? And that's where your stop, or you might do a staggered scale out stop. And so that's a trading plan. And then once you enter the trade, again, this is in the resources on the FAQ page. I talk about one of what I believe to be the best inventions since sliced bread in the world of trading, and those are OCO orders. Over the years, I talk about them, or I have talked about them many, many times. OCO means one cancels the other. Some brokers call them OCA orders. OCO, OCA means the same thing. One cancels the other, or one cancels another. Depending on your broker, they're going to use one of those two terms. And it's what I like about it twofold. Number one, it helps that person that's listening to my voice, is not a full-time trader like me in front of the screen, in pre-market through the after-hour session, watching tons of charts and watching the market tick by tick almost every single day. So they're great for that person. You enter a trade, whatever your breakout criteria is, you entered the trade, and then the OCO, you set two orders: a sell limit at your price target right here, whatever, it can be multiple price targets, and then your stop loss order in case you go wrong. So you entered here. Oh no, you'd be down here on a long. Your stop would be there, and about, typically I like a 3-to-1 RR. Depends on the trade. Sometimes I'll go down to a 2-to-1. Sometimes it'll be a 5-6-to-1 RR, meaning I'll risk $1 to make $6. All depends. So that's and I try to give those on the trade ideas, and that's it. And the thing is, make sure you set them GTC, the orders, good to cancel. That means they're not going to expire at the end of the day if your default order is a day order. And that's it. And you let it run. So in this case, with Charter and Apple, it's going to give you both the convenience that if you happen to be out and about during the day, or not in front of your computer, and all of a sudden there's a big move in either of these stocks, they hit your price target, great, boom. Or if the thing starts running the wrong way and it hits your stop, you're going to be stopped out. So you're not going to get home and find out, oh, geez, this thing really tanked today and it blew past my stop by another 10%. I got to close it out. So there's that convenience, but the bigger part, in my opinion, on these, and I always talk about, is the thing that most traders, even some seasoned ones, and at times this will happen to me, is discipline. So discipline is hey, you enter a trade and it starts going against you immediately, but it hasn't hit your stop, like these two, and you start second guessing it, or you get a little impatient. So those OCOs give you that discipline. It's set it and forget it. One of two things is guaranteed to happen. You're either going to be stopped out for a loss, or you're going to have your price target hit, right? And that's it. And these are swing trades. I went on to say, these are both, they were based on the daily time frame. So, and Alan, again, great question. I want to just kind of share all these thoughts for everyone. So these were based on the daily charts. Therefore, those are typical swing trades. And a typical swing trade has holding periods that are measured usually in weeks to months, right? If I give you a trade on a 15-minute chart or even a 60-minute chart, quite often those periods are measured in days, maybe weeks, depends on the trade, right? If I give you a trade idea, or if I'm trading something personally on a weekly chart, waiting for a weekly sell buy signal, and I have 20, 30% longer term plus swing targets, or that's really a trend trade, and those holding periods are measured in months and sometimes even years. Okay, so all right, so that's it, and let's talk about those two real quick. I'll go to them. That was yesterday. I haven't even looked at them today. Let's see where Charter is. So there's Charter. Remember, it was just as much entered here primarily, just like the Novo Nordisk trade recently. The big part, it had long-term support on the weekly time frame at about 215 right there. And so when you look at this chart, again, everything is relative. When you're looking at a weekly chart, you have big price moves. Weekly candles are all that really matters. And so right now, for all intents and purposes, it's still there. And then more importantly, on the daily time frame, I give you a suggested stop of 195.70, and we're still comfortably above that. So again, it's like any trade, it's either going to work out or not. That's it. And an OCO order is going to have either an order set there or an order set here, or maybe both. Take half there, half there. Everybody's different. Some people might want to peel out, take some profits as it runs, but the very minimum, if it starts to pan out, then at some point here, you're going to ratchet your stop up and follow it up, and that's it. So Charter is about exactly where we started, and it was only been, I forget, a week or so. Not much of a change there, and so no change in the technical posture nor my outlook. Apple was based on the daily time frame, also giving you a stop on this one, and 3 price targets, 3 current targets, which I'll most likely extend if it happens to start playing out. Why? I'll tell you why. Because if Apple plays out, it's going to drop down to T3 from where we're at now, about 10, 11% almost. If that happens, there are no guarantees. It will most likely mean the stock market has fallen, give or take 10%. If the stock market falls 10% from where we're at, again, assuming Apple's not stopped out, well, we already have a sell signal 1 here, the breakdown and back test on QQQ, the secondary trend line breakdown, bounced off the 50s recently. You guys know my thoughts on this. So now we're just waiting on the next sell signals, which will be break of the uptrend line and the key 50-day moving averages that they came in and bought the other day on that drop. And so that's going to open the door. So let's just kind of measure it out here. Let's just assume that's only to that next target or support on the Qs on this daily chart, 589. That's about almost a 6% drop. This right here, the pop-up box to the left tells me that's about a 10, almost an 11% drop. So in Apple, if Apple T3 is hit, it's going to bring QQQ down to this target here, that support around 557 plus the 200-day exponential moving average, right? And so therefore, it's also going to have confirmed the divergence on the the daily time frame, and it also will most likely, again, and this is how my brain's wired. It's like a game of chess. I'm looking 3, 4, 5 moves ahead, and they're constantly changing scenarios, guys. If this just burns on through here, then all that's out the door, at least for now. But as of now, that's the way I see it. These bearish engulfings on the weekly are intact. We need to take out this uptrend line right here. And if we do, then you're going to run at the 200s. But what it's going to do also, as if you recall yesterday, we have getting very close to a pretty decent trend change indicator, the weekly PPO histogram crossing down, flipping over to bearish, or red. Yeah, it's a bearish crossover on the PPO. And I've showed you before, those typically come around trend changes. So when you have these big green hills. And so a 10% drop or a pullback to the 200s, it's going to flip that indicator. And then that has a potential, it's going to potentially even change some things on the longer term monthly charts as well. So I don't want to get ahead of myself, but I do want you to know kind of how, think if this happens, then that happens, and then the next one will happen. as of now, short term, we're looking at short term stuff. Let me go to NQ, NASDAQ futures. I got this out to you right after. Again, I always encourage you if you're following any one trade in particular, like NQ. The first post I got out to you this morning was the rising wedge setup here. We're in pre-market. This is the trading max bounce target from the bullish falling wedge breakout that I gave you yesterday. And then we had a nice little bearish rising wedge here. We've come full circle, complete with negative divergence, just like we had positive divergence at that recent low. And then I followed up to make sure, it triggered. Now, you would have replicated the trend line, but we broke down. There was your sell signal. You got to move fast. The markets move fast. And that's it. So if you took the sell signal, nothing major, but so far a nice impulsive drop. Oops, I didn't mean to move that. I just moved T1. I'll put it back wherever it was. Remember, that was our first target from our initial short entry right here on that breakdown. And we hit 1, 2, 3, 4, reversed a hair shy of this T5 zone. Again, went on to break below the wedge. This is swing trading, guys. Swing and down, swing it up. And then now swing it down. And again, we came very close, but we didn't hit T5. Plus, I had additional targets on QQQ. So if this breakdown sticks, then that's my expectation. I expect it will. But let me show you what I've done today. I went through the market leading whatever you want to call them, 8, 9, 10 stocks. NVIDIA, I set it on the daily. So what I've done, and I would encourage you, if you're interested, if you see things the way I do now, and again, be you a bear, bull right now in the markets, again, everyone has their own opinion. You can use these levels in reverse, because what I'm going to show you right now, and I would encourage you to replicate these levels, are key levels that I think will be the catalyst. They're key support levels. So for me, these are support levels I've set price alerts on. I'm going to go over those now, in which to give me confidence that that wedge breakdown I just showed you on NQ is going to play out for more downside. In fact, that it ended a counter trend bounce, that the markets have probably topped at the recent highs. Again, a lot of ifs, but it's going to increase those odds. And therefore, it's going to increase my confidence and tell me to add to some short positions if that happens. And I'm going to go over these levels. NVIDIA, I already told you, they're going to report next week. So take everything that happens with a grain of salt, but levels are levels. But again, you just have to take it with a grain of salt, because until they report, and even after they report, it can undo anything that happens. Let's just say hypothetically in the next week they break out the new highs, and that's on face value bullish. Well, that breakout can fail. Let's say they break this. This is the level I'm watching, 179. If 179, and I have a price alert set here. Why did I set a price alert at 179? Well, it's a horizontal support level. You can see all the reactions there, especially recent. I put a higher weighting here because you can see you cut through here a little bit in the past. I always put a higher weighting on recent reactions in support resistance levels than the older ones, right? That would only make sense. And then you also have, as I've highlighted recently, an uptrend line off the lows, and that 50-day moving average, which again, so many semis hit the other day after the breakdown, hence the bounce and the back test that we got on the SOXX wedge. And so at 179, this is what I call my, you guys know if you follow me for a while, BOD support, benefit of the doubt, right? In other words, why short the 50? The 50's been tested intraday, and then we recovered it. And there was a solid close back above it. So we never lost the 50. That was just a successful bounce off the 50, pull back and bounce. The trend line was violated briefly intraday as well, but that put in that reaction low. So I think a lot of eyes are going to be on the recent lows there. Again, I don't want to overdo NVIDIA, but it is a very important stock. And again, they're going to report, but as I've already shared my thoughts, the charts to me clearly indicate post-earnings will probably be down based on the bearish technical posture of the stock and the market, but we'll see. Been wrong before, I'll be wrong again, and that's about the only guarantee I'm going to give you in this game of trading. I'll be wrong a lot. Nobody bats 1,000. And there's plenty of other trades, there's plenty of longs, and again, for those of you who are bullish, take these same levels that I'm waiting to see a breakdown on and buy pullbacks to. That's the value add. If you're a bull in a bull market, you don't want to be buying all the highs, the breakouts to new highs, because this market and all these stocks have a pattern of making marginal new highs and correcting. So you're only going to make the money to be made is buying pullbacks to support, and that's what I'm giving you here, support levels. All right, Apple, I'm going to go back on the rest of these. I have my alerts on the 60-minute charts. You can see it on the daily as well. There's that level. That's our official trade. But Apple, look at this. Been dancing on about 266.45 lately. Dancing on it. Very nice support. So I have an alert set there. I believe when that happens, it's going to bring the sellers in. Both longs will be stopping out. Short sellers will pile in. And that's going to increase the odds we're going to go down and hit my price targets, at least that first target. So there's your level, 266.45. And you know how I work. If I'm sitting here, whether it's today, next week, or a month from now, and I start getting bing, 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 these alerts going off like popcorn, especially these related stocks. You know, as I often say, an index or a sector is simply a sum of its parts. And I even take that to another level. On the cap-weighted indexes, like the NASDAQ 100 and S&P 500, they're simply a cap-weighted sum of its parts, meaning that, you know, if you have... KLAC, I'm just looking at components of the NASDAQ 100, Texas Instruments that are down there. They don't matter. They're fun to trade. You can make money on trading individual stocks. But the only thing that matters for the indexes are these big mag stocks because of their extremely overweight weighting on those indexes. So, and my point is, if I've set alerts, which I have on about 4 or 5 of these, I'm going to go over these right now, and then I have 3 or 4, or even better, all 5 of those triggering, that tells me get in quick. Short quick, because you just had the majority of these stocks break support. That's most likely. Doesn't mean the market's going to crash, but it's probably going to drop to the next support level, and it's probably going to do it pretty quick. So 266.45. And again, this is short-term stuff, 60-minute chart. Microsoft, I have it at 492.77. It's a level I've been watching here. We had a divergent low there. You know, that was DL. I don't have it marked, but you can see, you know, this is swing trading. These, you know, the big caps have stalled out, and you know, we can all, it's any time in the market you can be the glass half full or glass half empty guy or gal. Bulls can say, and it's a valid point, this is just high-level consolidation on stocks like Microsoft, Apple, Alphabet, Amazon, that they've, you know, gotten a little ahead of themselves, and it's healthy, even in the strongest of bull markets, to see some consolidation to work off the near-term overbought conditions and excessive bullish sentiment before they break out and move up to new highs, right? So there's the glass half full scenario. Glass half empty scenario says this is a potential double top pattern with a big trading range, and it's defined at the bottom by 492.77-ish. And so a break of that level will bring in the sellers. That's what I'm positioned for. That's why, or I'm expecting, and that's why I have an alert set there. So again, these are levels to watch, and I believe they will bring in the next wave of selling. And I don't have a single support level on Microsoft on my 60-minute chart until 449.61. So if that breaks, my expectation would be a drop of almost 9% in Apple. I'm sorry, Microsoft. And if that happens, I can all but guarantee you the stock market is going down with it. Again, it hasn't happened. You've heard me say this. Another thing that I say all the time is support until unless broken. So there it is. There's my third alert. Alphabet, 275 even. It's not a super big level, but there's a gap right there. And we've been dancing on it right there. So I've got an alert set there. We had a divergent high here, a little pullback. This is simply a marginal new and still a divergent high right there. Just bring the lines across, and that's it. And then you can see my first and second targets on that one, if that level breaks. Amazon, I think the level to do the trick. It's not a super duper level, but it's one. Again, I'm just trying to put as many alerts as I can on these guys. 238.34. You had a previous ATH right there. I believe that was all-time high. I think at least a near-term high, divergent high, just like this divergent high. This is swing trading. Get divergent high, and then you trend line break, little wedge, you go down, run up, another little wedge. There's your trend line break, drop down, positive, aka bullish divergence, you rally. No divergence, but you don't always get divergence on a turn. Again, it's just a level I have. Take it or don't take it. Up to you. Broadcom, you know, I'm going to pull this right here, and I'll tell you this is the magic number for Broadcom. So we'll make that blue, and then we'll set a price alert on it. And that's it. If Broadcom breaks that about 325, a little bit above it, it's going to drop to about 311.52, most likely. At minimum, again, at minimum. Is just a big divergent high. And when you look at the daily and weekly charts, there's a potential for more. All right, let's move on. I don't really have Meta marked up, nor do I see a key level. Meta is one of the big ones that's already down a lot and really beat down. So I'm not going to pick on that one or really look for a level to break because it's already down. How much did this one drop since the recent high? It's down 24%. And then Tesla, I haven't looked at it yet. This would be the level. I think Tesla needs to break this this trend line here. Yep, I'm going to tweak it a bit, just tighten it up, extend it out, and I'm going to set a price alert. Okay, there we go. Okay, I'll tell you what, we're at the 26-minute mark, so let's just keep this one short. I'll continue to hunt as I've been doing for both the objective long and short trade ideas. Like I said, it's the market's relatively holding up, but there's two markets out there. There's as I've highlighted many, there's a ton of stocks in bear markets, but there's also a lot. I continue to have that preference of blue chip names, fall into support, oversold. And that's going to most likely continue to work. And again, it's also about RR, risk reward. You just have, you get caught with the wrong headline in high flying stocks, whether it's AI stuff or any, meme stock, the bottom can fall out of those, meaning they can gap down. So even the most well-placed stop loss orders on a high flying stock, they get bypassed on an opening gap. That's one reason I like futures. You don't have to worry about those, opening gaps like you do on individual stocks. It could just blow right past your stop and leave it sitting there, or stop you out if you have a stop market or stop loss order. Those get filled at the opening price with order imbalances. So I'm not picking on Tesla. I just had this chart up, just trying to show you that if you had a, stop loss right here and the stock gaps down here, then you're either going to get filled at the open with all the order imbalances, or you said, nah, Randy, I use stop limits that say sell me at 400, but only 400, no lower. Then those orders just sit there and hang as the stock continues to fall and will only be filled if the stock comes back up to hit 400. And so stop limit orders are very ineffective at mitigating losses. All right, I will wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.